This is Brad Wolff, and this is the end of day Emini review for August the 29th, 2022. Today was a trading range day following Friday's Big Bear Trend Day. On the open, bar 1, it's a big bull bar. Traders can buy above it, but the risk is really big. So if you are buying, traders have to be aware that there might just be a couple legs up, such as this low 2 here, and bulls will exit and bears will sell. Probably a better limit order entry than a stop order entry. However, bulls will buy above it. This bar right here, it's a second entry short. Reasonable to sell. Again, the problem you have is the risk is big. So a bear selling here, stop up here, they're betting on a bear trend. And when you get a bar that's this big, that greatly lowers the probability. So bears that sold here probably would be quick to exit after this bear bar right here. Bull breakout, trying to form a wedge. 1, 2, 3. 3 legs up, testing the moving average. However, tail closing under the moving average, so probably better to look to buy a pullback, and there might be more sellers up here selling at the moving average. Disappointment, so bulls may sell out of longs here as they did on this bar. Reasonable short here, betting on the wedge. 1, 2, 3. It's also nested with the third push. 1, 2, 3 being its own wedge. Bears will sell. They'll sell below here. They'll sell below here. And another thing to point out is some bears sold here, scaled in. Maybe they sold more here. Maybe they sold more up here. They'll look to take profits here. However, this is still a reasonable short after 3 consecutive bear bars, 2 closing near their lows. Probably going down to the open of the day and maybe the low of the day. Bears, same thing here. They'll sell. It's getting more difficult to sell because it's at the bottom of a trading range and the risk is big. Stop all the way up here. But for a bear that is selling here, they're betting on a second leg down, and they'll likely be quick to take profits if the market turns up somewhere down here. So now the bears have a wedge. You can argue 1, 2, 3. You can argue 1, pullback 2, pullback 3. It doesn't matter. It's 3 pushes down in what is likely a trading range day. This rally was strong enough that there's probably going to be buyers somewhere down here. So bulls probably buy here. Bears, what do? The smart bears, for one, they weren't selling down here. They were selling pullbacks. If they did sell down here, they're using this to get out, break even. Worst case, bears exit above here, but you're already at the open of the day, and the market may just go sideways around this area. Low 2, low 1, low 2. Bears, you can take the short. It's not ideal. It's following 2 bull bars at the open of the day. Might be more buyers below. Pretty common when you have a bottom or the market starting to reverse that the market will trigger a stop entry such as a low 2 and it'll fail and break out to the upside, which is what the bulls tried to do here. They could not get followed through and the market created a wedge. 1, 2, 3. And the bears were able to sell higher and drive the market back down to this low 2 where those bears avoided a loss. Bulls, they can buy here. They can buy above here, buy above here. They can even buy this bar, but it's climactic, so the odds favor that a bull can look to buy a pullback rather than buy this high. But even if they did, they'd be disappointed with this bar. They could get out back at their original entry, whether or not they scaled in lower. Second entry short, it's reasonable to take profits here, but the reality is there's probably buyers somewhere down here, maybe back at this high, maybe even back at the high of this bear bar or this bull entry bar here. A bear that did sell here, which would be aggressive, they would have to get out of shorts here. Bulls, if they got out of shorts here, they would get long here. And bulls could buy above this bar. They could buy here. Same problem up here. It's 3 pushes, 1, 2, 3. So some bears will sell here, hoping for the strong bear breakout, and bulls will take profits. If a bear did sell here, they would get out above this bar, even though it's following 3 consecutive bear bars. Bulls, if they're trading always in, they buy again here or above here, and they probably get out below this bar. Bears, they'll sell here, betting on a second leg down. The bar is big, and it's just above the moving average, so better to sell a pullback, which is what happened here. The bears, they got 3 legs down. Most probably buy back shorts above this bar, certainly here. This is pretty late though. If you're selling down here, you're selling right at the bottom of a trading range, so it's not an ideal area. It was reasonable to sell this close, even though the tail is big. It's following 4 consecutive bear bars, so a trader that did sell here, disappointed here, never got a chance to get out break even here. That increased the odds that the market was going to retest the low close here, which is what happened on this bar. And as it reached it, traders bought. They also bought when it went below this bar. Bulls, some will buy here, but again, big bar, big risk, forcing you to buy in the middle of the range, not ideal. If they did, they'd get out below this bar. And now you have a lower high major trend reversal, or head and shoulders top, left shoulder, head, right shoulder. So bears will sell, 3 consecutive bear bars, probably sellers above and a second leg down. It's okay to get out shorts above this bar. Aggressive bears would sell below this bar or below this bar, betting on a test of the open of the day into the close. If you enjoyed this video, please go to the brookstradingcourse.com website, where you can find more information on the blogs, as well as discover more about the Brooks Trading Course. Thank you for watching.